to see that continuation of Aquino's good government, good governance policy. But as a bonus, a lot of investors also want to see growth in the Philippines. The market is not cheap anymore. It's trading at about 17.2 times PE, one of the more pricey markets in ASEAN. And this is the reason why I think we need to be able to execute on the growth story. We need to work on the infrastructure initiative, number one. There are also other possible growth drivers in the Philippines. I mean, agriculture is also one. We could talk of mining, you could talk of tourism, maybe you could also talk of some light manufacturing.
So, Alfred, are you saying that the risk of a Duterte presidency has not been priced in because the market believes whoever wins, Aquino's reforms are so entrenched that it's not really going to change anything?
Actually, it would really depend on the leadership style of the new president once he sits down in office. We'd only find out how good the president is once he actually assumes office. Assuming that elections turn okay and we could execute on the growth story, then I think you have to belong in the Philippines. I mean, one of the sectors that you should be looking at is the banking sector. I mean, Philippines has one of the least geared banking sectors in Asia. Philippines is an early infrastructure cycle story. We get this infrastructure story correct, there's going to be a lot of leveraging happening. And that's where the banks come in. That's one sector, I think. There's a couple of names there, big caps, maybe a Bank of the Philippine Islands, maybe a Metro Bank, maybe a security bank can come in.
Banco de Oro?
Banco de Oro is also okay. I mean, that's also part of our radar screen, yep. I would say companies that are having some infrastructure tilt. I mean, if things really work out here, Ayala Corporation has been very aggressive. They have a very strong balance sheet, a very sound management team. I mean, that would be a company to watch out for. I would also say SM Investments. I mean, I guess biggest conglomerate in town, biggest shopping mall developer. They've got the biggest bank. The country moves forward. One way or the other, they will be able to participate in the growth story.
So gaming has started here in the Philippines, and now there's this issue with China. How are things going to work themselves out?
If we're able to sort things out with China, I mean, I think gaming will be able to have better numbers moving forward, particularly coming from the junkets, like, say, the high rollers. There's 3 listed gaming companies here, Bloomberry, Melco, and Resorts World. We're probably a little bit biased towards Bloomberry. I mean, because we think that they have the best product to offer. And when the junkets come in, they will basically gravitate to the best casino in terms of quality.
So are you saying that, what's happened in Macau, in Singapore also, this phenomenon, could be repeated in the Philippines, which is Chinese high rollers coming in gambling, but not just that, bringing in suitcases of money and buying up real estate?
In the Philippines, foreigners could buy property, but limited to condominium units, because land ownership is still restricted. So we need to maybe revisit the Constitution if we want to open up ownership in land to foreigners. But, I mean, if there's a lot of foreigners who want to buy property here, a lot of the developers here have very nice high-end condominium projects. So like an Ayala Land or something like that.